Welcome to Bunnex Investment Group. By the end of this video, you should be able to catch the following trade types. Example 1, it was on gold where we anticipated a buy at this particular level, and this is what happened. The market actually respected that. This is pound against CAD where we anticipated to see a buy at this particular level, and this is what happened on the after. So basically, we are going to talk about a strategy that will actually help you and enable you to catch these type of trades. Sit back, relax, and make sure you watch up to the end of this video. Before we talk about anything else, this strategy can be incorporated in another trading strategy as a tool to treat a different trading condition, or we may as well say a different trading scenario. Moreover, to see results in any trading strategy, you need to play the game long enough with the same rules. I've seen several traders changing strategies over and over again, but this is the secret to trading and making consistent money. Play the game long enough with the same rules and see if you won't make money. Let's now have a small explanation of the theory behind our day trading strategy. So we all know that markets issues rallies in their flows. By rallies, we are saying moves to the upside or moves to the downside, which will be in a very quick manner. However, rallies always come after enough contracts accumulation. By contracts accumulation, we are saying there should be buyers and sellers within a certain region so that a rally can come. So the underlying rule is markets consolidate before rallying. Before they make any significant move, they need to rally, and the rally can be an initial point or it can be within the rallies, right? So they should consolidate before moving in an upward manner or downward manner. So our strategy depends on this particular concept. Consolidation means contracts accumulation, and before rallying is issued, after liquidity grab as shown below. We are saying for rallies to be issued, there should be a liquidity grab. Let's now see what that is. This was day one. We had a rally, right? A move to the upside. Then on day two, we had a day of consolidation. What is a day of consolidation? It is a day whereby the opening price of that day is almost equal to the closing price of that same day. If we see a day of consolidation before we rally the next day, we have a higher probability of seeing the market come to yesterday's low, like in this particular case. So we had a rally on the first day, consolidation, then rally. So basically we are saying consolidation is if we see a day of consolidation, we will need to see a retest of yesterday's low on the following day. So here are the rules of the M15 day trading strategy in subject. Your job in this particular strategy is to spot the first day of rally in any direction. In other words, we must see a break of market structure. Break of market structure is whereby we see a rally that breaks any high before it, or a rally that breaks any low before it, right? Like that. So this is a break of market structure, and that is the rally that we need to see. After this rally, we need to identify a day of consolidation, which is defined as a day whereby the opening and closing price is almost at the same point, right? So after these rallies, we need to see a day of consolidation where the opening price and the closing price is almost at the same point, right? The day after consolidation is the day of entry, where we expect to see the market come and retest yesterday's low, right? In this particular case, it's retest of yesterday's high, which is this one. So we need to see a retest of yesterday's high, and at this point we look for a nameable candlestick reversal pattern. Let's now have examples of what we are trying to put across. Before we see examples, please note that we have a free Telegram channel where we share free signals, free setups, and trading tips. Be sure to join in using the link that I've left in the description box below. First example, on Euro against USD, 19th of June 2023, we can see that we had a rally. This was the rally. Then after that rally, we had a day of consolidation, opening price, and then the closing price are almost at the same point, right? Therefore, we would expect to see the market to come and take or retest yesterday's low, which occurred. There was a railroad track here, and the market went to the upside, right? After that, we can see as well that we had opening price and closing price almost at the same point again, and we were expecting to see the market to come to yesterday's low. It's unfortunate that on this particular day, they missed to retest yesterday's low, right? In this particular case, this was USDJPY, 16th of May 2023. We had a rally. This rally actually broke structure. After breaking structure, we had a day of consolidation, price almost at the same point. Then this was the low of yesterday, and on the following day you can see they came back to retest it and went to the upside like that. Then here's another example where we had a rally broke structure. Then after that, we had a day of consolidation, opening price almost equal to closing price. Then this was the low, and on the following day, we had a bullish engulfing pattern here, and the market went to our direction. So to summarize everything that we've said the first thing is to identify a rally, then identify consolidation, and then identify retest of yesterday's low liquidity grab activity. On that note, we have come to the end of our today's video. Thank you for watching, and see you on the free Telegram channel. Have a blessed day.